Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, piece by piece, and in plain English. Today we're exploring an expert advisor called Momentum Gated Trend Pullback. This approach blends two well-known tools, a moving average trend filter and the relative strength index, to look for pullbacks inside an established trend rather than chasing a breakout. Over the next few minutes, you'll learn exactly how it defines a trend, how it times its entries with momentum, how it sizes each position by risk, and how it manages an open trade. Everything here is educational information only, so let's dig in. Let's start with the big picture. Momentum Gated Trend Pullback is a trend-following pullback system. Instead of trying to catch every move, it does two things in sequence. First, it decides whether the market is in a genuine trend, and only then does it look for an entry in that same direction. The idea is to buy dips inside an uptrend and to sell rallies inside a downtrend, which tends to give more selective, higher quality entries than simply following price wherever it goes. The direction is established by a stack of two exponential moving averages, a fast line with a default period of 20 and a slow line with a default period of 50. But a moving average crossover alone can fire during flat, choppy conditions, so this strategy adds a slope filter. The slow moving average must also be sloping in the right direction, measured over the last 10 closed bars, before the market is considered to be trending. That extra check is designed to keep the strategy out of sideways ranges where trend signals are unreliable. Once a trend is confirmed, timing comes from the relative strength index, or RSI, with a default period of 14. Rather than reading RSI as a classic overbought or oversold tool, this strategy uses it as a momentum gate around the midline. It waits for momentum to reset against the trend, then resume in the trend's direction, and that resumption is what defines the entry. Risk control is built into the core of the design. Stops and targets are scaled to the average true range, so they adapt to current volatility instead of using fixed distances. And the position size is calculated from a fixed percentage of account equity spread across the stop distance, which means every trade aims to risk a similar, controlled fraction of the account. This kind of strategy is generally suited to traders who prefer a structured, rules-based, trend-aligned approach and who are studying how trend filters and momentum can be combined. As always, trading carries real risk. Losing trades are a normal part of any strategy, and nothing here is a promise of results. Now let's walk through the mechanics step by step. Everything is evaluated once per completed bar, using closed data, so the strategy is not reacting to the flicker of an unfinished candle. The first job is trend classification. For an uptrend, three conditions must all be true at the same time. The fast-moving average must be above the slow-moving average. The slow-moving average must be rising compared with where it sat 10 bars earlier, and the closing price must be above the slow-moving average. For a downtrend, those conditions simply mirror. The fast line must be below the slow line. The slow line must be falling, and price must be below the slow line. If those conditions do not line up, the market is treated as trendless and no new entry is considered. Next comes the momentum gate. The lower gate is set by the PullbackRsi input, which defaults to 45. The upper gate is 100 minus that value, which is 55. In an uptrend, the strategy watches for RSI to first dip below 45, showing a pullback, and then cross back up through 45, showing momentum resuming with the trend. That upward crossing is the long entry condition. In a downtrend, it works in reverse. RSI must first rise above 55, then cross back down through 55, and that downward crossing is the short entry condition. When a long entry appears, the EA sends a buy order at the ask price. The stop loss is placed 2 times the average true range below the entry, and the take profit is set 3 times the ATR above it. For a short, a sell order goes in at the bid, with the stop 2 ATR above entry and the target 3 ATR below. That gives a reward to risk of about 3 to 2 on every trade, defined entirely by volatility. Position size is then calculated. The strategy risks a fixed percentage of account equity, 1% by default, divided by the stop distance in money terms, and the result is rounded and clamped to the broker's allowed lot range. Finally, an open trade is watched for a trend flip. If the fast-moving average crosses back against the position before the stop or target is reached, The EA closes that trade early to protect it. Only one position per magic number is held at a time. Let's read the important parts of the MQL5 code as they appear in MetaEditor. At the top are the inputs you can adjust in the strategy tester. You can see the fast and slow EMA periods, the RSI period, the PullbackRsi gate at 45, the slope lookback of 10 bars, the ATR period, the stop and target multipliers of 2 and 3, and the risk per trade set to 1% of equity. Just below, the code builds the two gates. The lower gate is simply the PullbackRsi value, and the upper gate is 100 minus that value. So with a default of 45, the two gates sit at 45 and 55. Now look at the two signal lines. The long signal is true only when we already have an uptrend, and the previous bar's RSI was below the lower gate, and the current RSI has come back to or above it. That is the momentum resuming upward. The short signal mirrors it exactly. We need a downtrend, the previous RSI above the upper gate, and the current RSI back at or below it. When the long signal is true, the code reads the ask price, sets the stop distance as the ATR multiplier times ATR, places the stop below entry and the target above, sizes the position by risk, and calls trade.buy. When the short signal is true instead, it reads the bid, places the stop above entry and the target below, and calls trade.sell. Both sides use the same volatility-based stops and the same risk-based sizing. This is educational only, not a recommendation. Let's walk through this illustration candle by candle to see how the strategy would think. On the price chart, you can see the two moving averages, the faster blue line and the smoother gray line. And beneath the candles, you can see the RSI in its own subpanel with the long gate at 45 and the short gate at 55 marked as dashed lines. We begin on the left in a rising market. The first two candles push higher, and the blue fast line is holding above the gray slow line, with the slow line sloping up and price sitting above it. That combination is exactly what the strategy calls an uptrend, so it now starts hunting for a pullback entry rather than buying immediately. This is an important part of the design. By insisting that the slow line itself is sloping upward over the last 10 bars, the strategy tries to filter out flat, directionless markets where a simple crossover would be unreliable. On the third and fourth candles, price eases back and pulls in toward the moving averages. Notice the RSI in the panel below slips down and dips beneath the long gate at 45 into the green dip zone. That is the momentum reset the strategy is waiting for, a temporary cooling off inside a market that is still fundamentally pointed higher. It does not buy here, because a pullback on its own is not enough. Buying while momentum is still falling would mean stepping in front of the dip with no confirmation that buyers have returned. Then, on the next candle, price turns back up and the RSI climbs back up through the 45 gate. That upward crossing, while the trend is still intact, is the long entry condition, and you can see the buy entry marker appear right there. At that moment, the strategy places a protective stop 2 ATR below entry, just under the recent pullback low, and sets its take profit target 3 ATR above, a reward to risk of about 3 to 2. From there, the trend does the work. Each following candle prints a higher close. The fast line pulls further above the slow line, and price runs up into the take profit target you can see marked above. The long trade is complete. Now watch the character of the market change. After that peak, the candles roll over. Price drops back below the gray slow line. The blue fast line crosses beneath it, and the slow line begins to slope down. Those three conditions together now describe a downtrend. So the strategy flips its bias and looks for a rally to sell into. As the market bounces on the next candle, the RSI lifts back above the short gate at 55 into the red rally zone. Again, the strategy waits. It does not sell on the bounce itself. On the following candle, price resumes lower and the RSI crosses back down through the 55 gate. That downward crossing, inside a confirmed downtrend, is the short entry condition and the sell entry marker appears. Just as with the long, the strategy needed the rally to fade and sellers to reassert themselves before committing. The stop is placed 2 ATR above entry, just over the small bounce high, and the target sits 3 ATR below, keeping the same volatility scale distances and the same reward to risk shape as the long trade. Price then works steadily lower. The moving averages stay stacked bearishly, and the market slides into the take profit target marked near the final candles. That completes the short trade. Notice the symmetry. In both cases, the strategy required a trend, waited for momentum to move against it, and then resume, and only entered on that resumption, with volatility-based stops and targets on every trade. Of course, not every setup would play out this cleanly, and losing trades are a normal part of any approach. So that's a full walkthrough of the Momentum Gated Trend Pullback Expert Advisor. We saw how it defines a trend using a fast and slow EMA stack with a slope filter, how it times entries by waiting for RSI to reset and then resume through its midline gate, how it scales stops and targets to the average true range, and how it sizes each position from a fixed percentage of equity while protecting open trades with a trend flip exit. Remember that everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.